record this. All right, so I'm just going to take a quick look at the markets right now, what we had happening this week, and potential setups for next week, right? So this week, just diving into it real quick, we did have a lot of USD weakness, right? We saw the USD pull back pretty significantly back into these key areas. If you take a look here on AD USD, for example, right, price was overall in a very strong downtrend. We were in a sort of a ranging situation right here, right? Price was just moving in between these two areas. Then we saw that clear push back to the upside into this major resistance zone on the daily time frame, right? And just taking a look at the US dollar overall, we could see that on the larger scale of things, right, we have been moving very bullishly to the upside, right? However, in the recent days, for the past week, 2 weeks or so, we have been seeing price showing more bearishness here on the daily time frame, right? So you can see here for the past week, price has been coming down from this level of support, right? We could see that we reached into this resistance area, but however, we didn't manage to actually pass past that, right? We actually retested once or twice, and then price started to kind of move within this range. We came back up, almost seeing that momentum push to the upside. This was during the FOMC and interest rate of the week before. But then price quickly made a turnaround and we pulled back down, right? Sinking even lower here on the DXY. And if you're unfamiliar with what the DXY is, it's just basically the US currency strength. And it basically gives us sort of an idea of how strong the dollar is relative to all the other currency pairs that we look at, USD cross pairs, right? So you can see for the past week that the US dollar has been significantly bearish. And there's a couple of reasons as to why that is. However, I don't think that this bearishness should indicate that we should, see a turnaround in the USD per se, because overall the Fed has been quite hawkish with their stance of monetary policies, interest rates increase, as well as their overall stance on getting inflation back to those regulative levels, right? To that 2-3% area that they want inflation at. And just a quick look at the US dollar, because the USD is really the currency that has the markets moving right now. It is the reserve currency of the global economy, and it is the major looker, the main currency in focus from all global economists alike, as well as traders, all right? Big hedge fund owners and big central banks as well. The US dollar, this has been the first time like the US dollar has been moving this bearish since March 2009. This is the first time that we have this large decline that we saw in the dollar, consecutive decline since March 2009, right? A couple of things to note as well. During FOMC, we did have from the Fed talks of, inflation surges starting to be more moderate, right? So we are seeing that the increase on interest rates is helping to decrease inflation and bring it back to more regularly monetary levels, right? As well as the better CPI numbers was the catalyst that helped the US dollar move. However, CPI, if we actually take a quick look at that, right? Let's take a look at this week. Right, CPI was, take a look here. I believe it was a Wednesday, right? CPI was the Wednesday. This is interest rates. So we had that interest rate decision being up to 4%. On the chart's not loading everything. All right, let's see. Where's the CPI numbers? Right. So that was the Tuesday. CPI came out at 298.012, right? So we actually got an increase of 0.4%. Not that much. However, as you can see, compared to the consensus, it was actually lower than expected, right? And the previous as well, we did get a higher number. But again, that consensus matters more because of how the markets think, right? when you're trading with not just, you know, price action, but it's a psychological thing as well. You're trading with other people against other people, right? You have the retail traders, which are us, right? And then you have the banks, the movers of the market. Now, the thing with banks, they are forward thinking, right? So when the expectancy doesn't line up with the consensus, right, then that could cause have a major turnaround on price with whatever currency you are looking at, right? So something to note really quick is that markets are forward thinking. Okay. And that just means a lot of times when we do have highly impactful news, we can see the markets actually price in that data before the actual event itself. And if that move isn't priced in to what we expected, then we could see a turnaround in price, such as CPI numbers coming out worse than expected. Even though that was the catalyst for the US dollar to move, it had a negative impact on it. All right. And that's why we saw this sort of bearishness, that price just continued this push lower, right? Because of those bad CPI numbers. We did have some other things in focus as well, with core inflation, as well as the initial jobless claims and inflation rate. This comparison here being from the 12 months comparison of October to this October, right? Taking a look at that, it came out at 7.7% rather than the consensus being 8. So these numbers are inherently, it's good, but at the same time currently bad, right? Just because what we're looking at from the Fed is those interest rates increase, right? For the Fed to maintain that hawkishness and see more interest rate hike. However, if inflation is coming down compared to the previous month, compared to the previous year, and we look at that comparison, then that means things are starting to kind of slow down. It's becoming more maintained. But however, there's still some things that you need to pay more attention to than others, right? So it's a sort of a balancing act when it comes to monetary policies and what the Fed has to do in order to get back to that 2 to 3% inflation rate. All right. And that's one of the reasons why we saw the US dollar actually sell off so much, right? So let's take a look at some of the charts here and the possible setups that we could see next week. One of the trades I'm looking at here is AUD/USD. Now, for obvious reasons, AUD/USD has come back into that significant level of support/resistance, right? Previous support and now turned resistance as price pulled back into that area. Now, again, overall, we are in a very strong downtrend. The US dollar is by no means weak any long term. However, short term buyers, we could possibly see price pull back even more to the upside. So looking here at the 4-hour, and really want to take a closer look at what's happening on the smaller time frames, just because we don't really have much volume right now in the markets, right? It is November coming to December. It is the end of the year. So volume is going to be hit or miss, right? So that's something you need to know. If at the moment price is moving strongly to the upside, then we could possibly see a continuation of that move just because there's more buyers than sellers in the market. We're looking at this significant level here, but do we have enough momentum, enough volume for price to actually push back down, right? At this point, with that US dollar weakness, we saw the buyers take that opportunity to rally to the upside, and we could see a continuation with that upward movement. Now, looking on the technical aspect where we could enter for a possible trade, this is the forward chart, right? Being more conservative, we could possibly see a pullback all the way down here, right? And then price continue back up, and then a break of this area for a continuation, right? So once that break does happen, then there's more of a likelihood for price to continue moving upwards. Vice versa, if price manages to maintain this resistance zone again, so if we get some bearish candle formation at this point, you could take the trade back down into these levels, right? So this is the forward chart. looking at the 1 hour, if you're somebody that trades, intraday, day trading, and you really can't, you don't have the patience looking for that long, then at this point, what you want to see if you're looking to take that sell opportunity back into these major levels, right? So this here will be one level that you'll pay attention to for price to possibly come back into, right? So the thing that you want to make sure firstly is price clears this zone. So you want to see price actually form or some candle formations out of this area here, just showing that, okay, maybe sellers are starting to enter the market at this point for continuations back lower, right? So at that point, if you do get a break off of this zone, then there's a higher probability of price continuing downwards, and hence, you could get a sell setup on this. Now, again, the US dollar currently is weak because of those monetary policies, with the CPI numbers coming out as it came out, as well as the other data that we are looking at, right? That being said, there's more bullishness than bearishness when it comes to US dollar. But again, the volume just isn't there. So we have to play it by what the market gives us, right? And that is if it gives us a chance for this reversal trade, price to push back lower, then we take that trade. Some key levels to look at is possibly price forming a support here, right? Or even something like right around here, right? So all of these are areas where you could potentially have buyers step in to continue drive price up, because what you need to pay attention to as a trader is the overall movement, right? The current movement right now, we have buyers. Buyers stepped in here, that buying pressure continued up. We see price failed multiple times to come back down. So the sellers just wasn't in it, and the buyers continued pushing price upwards. All right, you can see we formed these small support areas as price continued pushing upwards. So these were areas where buyers and sellers struggled to get control of price. And at that point, we reached into the major zone. So as we stepped in here, you could say maybe this is where we'll see potential targets being hit, price actually starting to weaken from the buyer's side, and sellers start stepping in because this is a major zone, as we noted. However, you don't want to take the risk without having your confluences, right? That the end price pulls back into this area here, continuation seems more likely. We continue to downside, you get a trade, boom. Vice versa, you pay attention to this area. If price starts wick rejecting from here, then you know that, okay, buyers are trying to possibly step back in to continue driving price higher, right? So at that point, you manage your risk and you look for possible buy entries, right? Especially if price starts pushing back up into the zone. So this is a trade idea for me. Overall, on the 4-hour time frame, what we'd like to see is price reject, pull back down, back into these major zones, and then maybe a continuation, depending on what other news that we do get, because there are some things that you need to pay attention to the US dollar. From the FOMC statement that we did get, we had talks about the market growth in spending and production being more robust. Job gains have been more robust as well in the recent months. So less unemployment, more employed people. That means that the labor market is doing significantly well compared to the previous years, as well as unemployment remain low. Right, so unemployment is low, which is good as well for the economy. Inflation is elevated, and that is reflecting global supply chain demand issues and imbalances, right? It's not really something that the US could tackle for themselves by raising interest rates or anything like that. This is from during the Russia-Ukraine war that's still going on, causing global price increases to happen, right? So that's not something that the US could control, but it is affecting global prices, and it would have an impact on these currencies as well, these economies, right? And we see that reflected in the currency trading. As well as the global economic actual effect that that whole Russia war is having is something that we really have to pay attention to coming into the new year as well as ending this year off with we have more CPI information from the ECB, as well as I do believe not just the ECB, sorry, we also have we have CPI information from the ECB, yes, the European Union, as well as some inflation news for the GBP as well, right? So all of these would actually be setting up for next year's the first quarter of next year's trading, right? As it will just gives us a direction as to what to expect price to do. Also, we need to note that the monetary policy needs have to be significantly restrictive to get inflation to return back to those monetary levels, right? So back to that 2 to 3% range that we want to see. They need to tighten monetary policy a lot more. So that's something that we could expect from the Fed. All right, all of that gives the US dollars bullishness. However, again, markets forward thinking. What we're thinking about is slower pace growth and things coming to sort of a snail stop, right? A snail pace kind of stop. And that is what affected that US dollar and gave it this bearishness that we saw, right? Because I mean, if you take a look at it and you think of it logically, it makes no sense that the risk assets such as the AD, the NCD, and like the CAD, right, that these risk assets are doing more better than the US dollar, which you have been seeing the Fed readily being more hawkish, more aggressive with increasing interest rates and their stance and their policies and stuff like that, right? So you have to ask yourself why it is that the US dollar moved it did. And that is because of those market fears that we do have of that slower pace growth as we see things coming to, the bad numbers that we are seeing, right? Which again, doesn't really mean something negative for the US, but it could implicate that we are approaching sort of a slow pace growth overall as we try to get inflation back down to those standard levels of 2 to 3%. Right, so that's just something to pay attention to. Hopefully that's like not too above your head, so you can always rewatch this. I am recording this. Yeah, I am recording it. I just had to make sure I'm recording it. So you can always watch this over to get a better understanding. Other trades that we are looking at, right? So everything with that US dollar weakness, we've seen price come back into these significant levels. 80 CAD, again, like it makes no sense that the risk assets are doing, a lot better right now, right? So it has to be contributed to something else, right? Because something is bearish, you can only expect that the other currency would actually start moving bullishly, especially dependent on how much of a bearish impact that currency is having right now, right? Then you can see a turnaround on the price action, which is what we're seeing right now for this week that has passed. Taking a look here on 80 CAD, possible trades. I would say if price could actually come back below these levels here, then yeah, we could possibly get a retest of this area, right? If you take a look at next week, this week coming up, let's see, make sure, right? So what we have RBA meeting minutes. So that's something that we have to pay attention to as that will affect the AD. We do have some CPI numbers, but again, this is just for certain countries within the Euro area, right? So this shouldn't really have much of a significant impact if it doesn't include the overall Euro area, like these set of news events would have a significant impact on the European dollar. Other things, let's see, we have the inflation for the GBP as well, and we have CAD news, core inflation rate on Wednesday. So what we could expect during that time between now and then, if we do see the and again, look, we have CPI for the euro. So if we do see the AED actually retest back into this area right here, then we could look for a possible continuation to the downside. So this is something that I label for possible sell setup. Looking here at the 1 hour, right? Because the 1 hour is what we'll be trading most likely. Reset the chart, right? Okay, so this is what we have, right? Price pushed up. So we'll want to see price come back, test this level, right, and push lower, right? So if we could get a lower push here, then that continuation down seems highly more probable, right? So these are the levels you want to pay attention to. Where price initially made that bullish move, you want to see price come below this level here, right? So because this is a retest area right here, that could be for continuation longs. So you want price to push past this area. Again, that bearishness will be established, and then you could get a fill of this initial bullish move here, right? So price will continue lower back into these levels. There's a higher probability of seeing that happen, right? So that is something that I think is we could expect to see from price. So yeah, this would be the trade. You just have to wait, have some patience, see how that CPI number hits, affects the CAD. Again, that will be another catalyst for the CAD movement, and we could possibly get that trade to the downside if we do get some positive numbers. Looking at what we have for the expectancy, we could see that okay, inflation rate, we are looking for an increase here compared to the previous month. I mean, from month of October last year. And looking at the comparison here, it looks like expecting core inflation to come down by 0.5%. So if we do get better numbers than this, then that would be good for the currency. And inflation rate looks to be the same. So overall, not too bullish, not too bearish, looks more bullish than bearish. So depending on the numbers that we get, yeah, we'll see how price action reacts to that. And earlier before that, we do have the RBA meeting minutes, right? So if this does help price push lower, then those continuations seems more likely, especially since there's no need to be buying risk assets right now. So that should help, the CAD actually push lower, right? So that'll be a trade idea, a trade setup for me, just waiting for that to actually happen, right? And I'm going to really be taking my time moving into this week because we are approaching the end of the year, right? So low volume situations, or we could rely on for those price movement is these little catalysts to help push, price action, help move along the momentum, the volume and everything, all right? The CHFs, all these yen pairs, we've seen mixed data on them, such as the CHF JPY here moving up, while this one, CAD JPY is moving down. Again, CAD being really affected by that USD weakness as well. They do move hand into hand sometimes. And we saw that reflecting overall. CHF JPY, we saw this sort of push down and this rejection back to the upside, the swing back to the upside. Again, because of that USD weakness, the CHF did recover here on this particular cross pair, right? And then now we're back into sort of a really weird place here on the CHF, right? Looking here at the daily time frame, you can see that we have all this sort of noise just here, right? So overall, bullish trend on the daily time frame came back into these supportive areas. These wick rejections happened right around that area, right? So we could expect that close back to the upside. Now, whether price is going to continue upwards back into these major levels here is anybody's guess because we don't have the momentum, we don't have the volume for it. But looking at the different catalysts that we do have coming up, I would say that we could potentially come all the way back up here. However, nothing with certainty, right? It's all about probability. Continuing looking forward, I do think that we should see the yen weaken a little bit, right? Especially if we start seeing the US dollars recover during December month. I do believe at the ending of November we have some USD news as well, some high impact news. And December month we do have some setups for the year ahead from the Federal Reserve, right? So that is something that you should pay attention to. We could possibly see some yen weakening, right? Especially if things, the markets settle down and we see that, okay, all this bearishness beforehand, right, starts to basically reverse on itself. We could start see the yen just weaken and price on a lot of these cross yen pairs actually sort of retest those initial movements, right? So an example of this would be such as JPY here. So as you can see, if we just draw it out, we have these areas of support, resistance, price showing these clear movement, these clear area movements, right? Taking the low of this wick, right? So possibly just move the daily time frame. Right, so we have this sort of linear movement. Price has been going up, but rather very not erratic, but not as clean, right? So if you just take a look at the 4-hour and the 1-hour here, right, we saw that short-term bearishness again with that USD weakening. We saw the yen pick up a little pace off of that weakness. And continuing forward, we could possibly see a continuation of that move. However, if we do pull up above this zone, my first thoughts would be, all right, if we pass this zone, we close above it, bullishly, and we manage to even push higher, then I'll be looking for buy situations, right? So around here, if price manages to push up, I'll look to take my first buy setup. And then I'll be looking to possibly stack that all the way back up to this initial move here, right? Where price started falling from initially. And that would be the sort of a trade that I'll be looking at as well. So let me just show for example case. Right, providing we don't have too much of a catalyst, then putting on a sort of a tight stop on this wouldn't be too risky. Something like this seems probable. It seems, doable. If price manages to push up, we should be able to just retest that zone and continue moving higher without rejecting all the way out here, right? And I'll continue to just, leave this target, let it run for however long as it can, right? So yeah, this is something else that has a lot of potential to play out too. And that's basically it, right? So that's basically all that we have to look at right now. Just the US dollar after that weakness, look for the areas that price could retest, retrace into. As you can see here, another area price has pulled back into of significance. So if price pushes up past it, we want to see it maintain that movement up and then enter the trade for a continuation higher. However, more than likely, I do believe we could see a turnaround on the US dollar and, strength stepping back in. Now, one of the reasons why we saw that weakness continue is also could be, right, bond markets were closed, right? So, and that was an observance of Veteran Day, I believe, right? So not much that the US Federal could have done about that when we saw that weakening, right? So we could possibly see a turnaround if they do start selling bonds, then we could see the US dollar possibly recover, right? So that is something that you should pay attention to moving into this week. Well, this new week approaching, right? And that's basically it. All the US dollar cross pairs doing the same thing. USD JPY, taking a look at that after this major fall here. You could use this level as a possible area for price to retrace from, right? Moving into the new week. So if we do get those bonds, once bond market opens, we could possibly see a recovery on the US dollar and price actually pull back up all the way into this level. Looking at 1 hour. Yeah, and that's quite a movement, right? So if price is actually able to pull past, yeah, we're looking at quite a movement, right? All like 1,000 pips really, right? So it really depends if we're able to get a recovery. Yeah. Yeah, that's something I think has a lot of potential to actually happen to before the ending of the year. Right. And I don't particularly trade gold, right? I don't really have any love for gold. So I can't really say much on gold right now, but overall, if the USD does recover, then we would see a massive sell-off on like gold and all the other pairs that the US dollar has been bearish against, right? So that's just something to pay attention to. All right, daily time frame here in the DXY. This is another major level that we're looking at. So if price pushes into this level, then we'll be looking for that support to be maintained and a push up, right? Which is when we'll see the US dollar turn around. But if we do push below this area, then we'll just see we could possibly see more massive USD sell-offs, right? Because this is another major level that, all the analysts of the big hedge funds, big banks, corporations, would be looking at, right? Would have attention towards, right? Because this is the next significant level. If price manages to push past this area, then yeah, those sells off, no matter what sort of news that we get afterwards, might be the continuing movement, right? So we might see a USD sell-off continue. So this right here on the DXY is the main looker right now to see if price maintains that. And if it does not, then we'll see the JPY strengthen continue. We'll see the the risk assets. Depends on the risk asset you are looking at, such as NCD, CHF, NZD, CHF, stuff like that. We should see price continue moving down, right? Because those are more of the safe currencies, the JPY and the CHF. Those tend to do better in times of economic uncertainty, as well as if you have US dollar weakening, right? Because they are considered more safe currencies to hold, right? Just because the economy doesn't have too much going on, influxes and price data and stuff like that, right? So hopefully that's informative. You learned a thing or two. I am going to upload this so you can rewatch it if there's anything that you missed or you didn't fully get from this Zoom. But yeah, that's basically it. There's not really much that we could do, right? Because it's November, guys. So can't force no trades. We could look and see what price does and move to suit with that. But in terms of trade setups and stuff to look at, not really much. Because all we can rely on right now is these catalyst events to help push price in our directions, right? So yeah, that's basically it. Thank you for joining this Zoom call. Hopefully I was able to depart some information, some wisdom onto you. And feel free to, I don't know, share the YouTube channel as well, because I'm going to upload this to everybody to review, right? So thanks for joining, guys. I really appreciate it.
Thank you also for the call.
No problem, no problem. All right, so you guys have a great weekend, and do hope you have a great trading week next week as well.